Hey everyone, Larry Walsh here for Changing Channels. Managed services is one of the hottest segments within the channel today. In fact, this type of partner in this service delivery model, this revenue model, it's all wrapped up in this one package called managed services. This is a thing that both vendors and partners and customers are gravitating to. The customers want managed services because it helps offload IT management to qualified professionals, easing the burden on their organizations. The partners like it because of the recurring revenue that it generates, and the vendors like it for the same reason: solid, predictable, recurring revenue and profitability. Security is a key driver. In fact, security is the entree point for many customers to seek out managed services because security is so complex. They look to experts to actually deliver it for them. And one of the security companies that has been a fixture in the managed services world for a long time, which is Sophos. And they were amongst the first not just to dive into managed security services, but also to make it easy for partners to get into it by having a pay-as-you-go or a consumption-based model. Well, recently, Sophos has rethought that. They're still maintaining their consumption-based model, that's their Flex program, but they've introduced a new program called Elevate. And the point of Elevate is that partners make a commitment to a certain level of spend with Sophos in exchange for higher benefits and more resources. It is the epitome of compelling MSPs to put skin in the game to drive a greater level of commitment and a higher level of growth. And it's already producing some pretty interesting and positive returns for Sophos. So we've invited Chris Bell. He is the Senior Vice President of Global Channels, Alliances, and Business Development to talk about this new program, how Sophos developed it, and what their expectations are. It's a really interesting topic, and we hope you get a lot out of it. I'm Larry Walsh. This is Changing Channels. Let's get into it. Chris Bell, thanks for joining us on Changing Channels.
No, thank you for your time. Yeah, looking forward to spending a few minutes with you today.
Yeah, so look, you've been traveling around the world doing your advisory board meetings. Before we get into the crux of our conversation, what's the vibe out there? Because we're hearing a lot of different things from the partner community. It's an let's just call it interesting times, not just here in North America, but around the world. So what are you seeing?
Yeah, I'm seeing really a few things. If you think about one, the positive is everyone is optimistic about their growth prospects, right? If you look at the MSP landscape as an example, double-digit CAGR, pretty much everything in cybersecurity is a double-digit CAGR. So that's a positive. So optimism, but where you start hearing, really the challenges across our partner community is centered around cybersecurity landscapes getting more complex. There's lots more choices. There's plenty of vendors out there. Um, the threats aren't going anywhere. You heard about Simple Help last week. So understanding sort of the needs around their customers are asking them to add more value every day. And then on top of that, there's more and more security controls so that customers are buying. So how do you maximize the investments of ultimately that the customers have already procured? So just like you said, it's extremely interesting. It's one of the few markets we've heard about consolidation for years and years. And then you see more and more companies enter the market. So you just put all those dynamics together. It creates a sort of whirlpool of, yes, growth on one side, a lot of positivity on that same side, but how do you capture that in a simple, prescriptive way?
Yeah, yeah. I'll share with you is that uh, we just completed some new research on
Mhm.
managed services, and it wasn't much of a surprise, but it was interesting to see that cybersecurity issues, either an incident or a perception of a need for more security, is the number one driver to seek out managed services. And it's really interesting to see how security is a catalyst, not just for driving managed security services, but all managed services.
Absolutely. It's starting to be the core of the conversation. You hear about, MSP 1.0, 2.0, 3.0, and the .0s will keep on continuing over time. But now cybersecurity is at the center of the conversation. Before it's not break fix, it's not RMN, PSA. Really, cybersecurity is leading that conversation. So align well with your research.
Yeah. Well, since you brought up the various versions or the iterations of managed
Mhm.
services, how are you assessing the maturity of the managed services landscape? Are the MSPs evolving? Are they changing the way that they're approaching the market, particularly within the Sophos context?
Yeah, really, where I'm seeing evolution is a couple different angles. One angle is you do see more specialization, right? So as markets get more and more complex, customers are asking you to do more. One strategy is just by the nature of it is to go narrower across a vertical or go narrower across a domain that they know they can win with, right? So you are seeing more cybersecurity focused MSPs, or you're seeing more vertical centric, MSPs that focus on public sector or K through 12 or you name it, right? Just sort of vertical specific. So I think that's sort of one evolution. But then two, you're seeing security core to any offering, sort of regardless of where you're at. I've read plenty of studies, and if you look globally, 80% of MSPs have an MDR offering that they're offering to their customer base. So just by the nature of that, and if you just rewind 2 or 3 years, I can imagine that's probably less than 50%, right? So going back to my first point, yes, security's core, just like you're calling out as well in your research. A majority are, but just by the nature of like how do you win in a market that is becoming more and more crowded? You either go narrower, more specialized, um, or you have a target vertical. Right?
Yeah. Is this evolution, or I mean, actually, I should rephrase it a different way. You have actually rethought the way that you're engaging with the MSPs. Sophos recently unveiled its new Elevate program for MSPs. It's a change, but before
Mhm.
we get into those changes that you've implemented, was it the evolving landscape that compelled you to rethink the way that you're engaging with MSPs?
Yes, it was. I mean, we have 7,000 MSPs as part of our partner program. So, just like you said, around the listening posts, I got the chance to listen to many. All right, as I've traveled around the globe, and there's a few themes that are propagating really across that listening post. And um, what I hear is one, how can you be more prescriptive? Just make it easier to do business with me. All right, so that's just one. Um, Two is certification and services led is where we have to go and we have to continue, and like that's where our value is going to be, and that's where our end customers expect the value to be. So how do you assist there? And then we're all in for-profit businesses. Our MSPs are in for-profit businesses, so by the nature of that, margin matters. So if you give me the prescriptive answer, also give it to a way that aligns to my business objectives, incentives, which really starts with EBITDA, starts with margin. And if we're doing what you tell us to do to get to the right customer outcomes and security outcomes, help us also get to the right business outcomes to drive our growth.
Well, one of the things that I remember when Sophos first entered into managed services. So, for those of you who aren't familiar, Sophos is a leading cybersecurity company. They've been around for a long time, and they came out of the era of on-premise or device side software. And so, managed services was something that Sophos evolved into, but Sophos was also among the first to go to a more consumption or a pay-as-you-go based model with managed services. Elevate's different from that. And it's not that you've abandoned your legacy model, but you have created a parallel model. So tell us a little bit more about Elevate and what's behind that change and how does it work?
Absolutely. So, and just like you said, we started this consumption-based model back in 2016. So we were on the forefront and had the foresight that we knew that's where the market was moving, and that's what our partners were desiring. And that model is called MSP Flex. So you'll hear me refer to it probably a few times in our conversation today. And MSP Flex, just at a holistic model, is consumption-based. We recognize that we want to meet our partners with where they're at on the journey, and we have some MSPs that just by nature they're small, and they need to start somewhere and they need to start small, right? And they may not be able to commit on day one, but our goal is to get them to commit over time, right? To some sort of term commitment. That is what MSP Elevate is, right? So it's a 12 month term commitment, around 2K of monthly spend each month. So very reasonable amount of spend. And our goal here is really to say those partners that are building practices on Sophos, we need to reward, right? We need to make sure that they're growing profitably with us, they're leaning into us, their success is our success, and vice versa. So what we've done is created packaging and bundling at a very competitive price points. So think discounts, to help them grow more profitably. We've actually added features into our MSP Elevate program that only MSP Elevate partners can get, right? So that's another area. Another area, as I highlighted earlier, is those partners that have the sort of highest level of architect certifications, training, and enablement of their sales team and technical teams. Those are the ones that we see retain their customers at a higher rate, can expand with their customers, and attract new customers. So we've included architect training at no cost. So keyword sort of free, no cost. So there's two or three things that I believe is core to any successful channel program. Ease of doing business. So simple process to buy, procure, or sell. Second is around training and enablement, right? And the third is you have to have a product that our partners can win with, right? And I think we've done all three of those as part of Elevate.
Okay. Well, which came first though? Because the idea of having a minimum commitment. So even at $2,000 a month, I mean it's not a big amount of money, but it is still a fixed expense.
Mm-hmm.
And the MSP community has been under pressure for a while, because rising costs, the cost of talent, level of competition. I mean, there's been a lot going on in the MSP community for the past couple of years. Did they seek this from you, or is this something that you came out with and said, in exchange for making a commitment, we're going to make a reciprocal commitment to you in the types of resources and benefits you were just describing?
Yeah, twofold. So one, we're going to continue Flex, right? So we absolutely recognize that there are partners. To your point, it's a competitive industry, and they may not be willing to make that $2,000 commitment. So put that aside. What we heard from our partners directly were really the attributes of the program, right? So we heard that they needed a prescriptive bundle that they could bundle as part of their core offering, right? Like we heard that they wanted um, network offerings that they didn't have to that they could do in a consumption based fashion, right? Because network costs up front can be pretty high. So we sort of heard the core aspects of it, and then we had to go to the drawing board on say how can we align to these core attributes. And to be completely transparent, I mean, there's elements that when you have a commitment from your partner base and you can understand the size of that commitment, it allows us to do things um, like design specific offers and understand the sort of profitability of our business as well as the profitability of our partner's business that we couldn't do before. So what you're going to see us do is it's going to allow us to lean into new offerings in MSP Elevate first. And it's going to allow us to really capitalize on the feedback we're getting from the partner community and then know that it's going to be successful because we will have a pool of MSP Elevate partners that we know that will lean in with us as we continue to add new offerings, new pricing, new packaging, new training into this new program.
So when you released Elevate, you announced Elevate. What was the reception? Were the partners, jumping on this, saying, "Look, this looks like a better deal"? Because one of the things that I talk about frequently with people like yourself is that if you want to move partners in a different direction, you have to create an imbalance, an economic imbalance. So you make a more favorable economic equation for the direction you want them to go in versus a less favorable one for the one you don't want them to be in. Mind you that Flex is continuing as an option, but it sounds like Elevate is where you want them to be. So
Mhm.
was that part of the thinking?
Yes, so that was absolutely part of the thinking. If you think about all the features, benefits, training that we added to Elevate, we did have to create a imbalance to your point. And what we expected is many of our partners that were already over $2,000 to spend, we're going to jump in there because they just got incremental benefit, and they were already hitting that 2K a monthly spend, and they had been partners for 5, 6, 7, 8, 9 years, right? Um, so yeah, there were some areas of investments that we had to make internally, but we wanted to be a first mover in this space, right? And we will continue to be a first mover in this space. So yes, there was absolutely an imbalance. To answer your question directly, though, around the positivity we're seeing around MSP Elevate, we're a little over three weeks in, so not even a month, And if you, we have over 10% of our revenue from MSPs. Like those partners are in Elevate, right? So 1 month in, over 10%. We have hundreds of partners already in Elevate. So just by the nature of the traction that we saw in the first week, it was about 20, 25 partners. In the second week, it went to 100. Now we're in the hundreds. Over 10% of our revenue is part of MSP Elevate from our MSP community. So I would say it's been a glowing success. It's actually more than what I even expected, and I was pretty bullish on it.
Well, that's actually leading me to think about what does this look like when you talk about creating this first mover advantage or being the first one out to do this. Now, having commits is not a new concept. Other vendors do it, but it's not necessarily common either because the partners MSPs are typically risk adverse. You know,
Mhm.
they don't like they don't like to incur fixed cost or unnecessary fixed costs. And all forgiveness for saying it like this, but as much as you say a lot of your resources are free, they also have indirect or soft costs associated to the MSPs as well. So how does this actually position Sophos competitively against the landscape? I mean, while you're a well-established and well-known brand, you're awash in a sea of competitors that are either direct or alternative to what you do in terms of managed detection and response and malware detection. Go down the litany of things that you do. There's a number of options out there. So how does this position you competitively?
Yeah, I would say one area is if you just think about a portfolio and what to go back to just security outcomes. What matters around security outcomes is obviously the term platformization, consolidation. So first, core is the platform, right? So we have a platform that we believe we have built for MSPs. So that's one that not unique as far as we're the only ones, but when you put pieces together, you become unique based off the sum of the parts, right? The second is we have over 600,000 end customers. About 300,000 are endpoint, about half, the other half is firewall. Just by the nature of our size and scale, allows us to get to security outcomes that others can't get just based off the data that we're getting back into that platform, right? And then if you think about what matters to end customers is protection, right? And getting to customer outcomes. We're the world's largest MDR provider by customer count, over 30,000 MDR customers. And scale does matter in some use cases, right? And this is one of the use cases in security where scale matters. So putting all that together, we have endpoint, cloud. We've been winning in the sort of mid market and down. Now with the SecureWorks acquisition, it allows us to go to mid market and up. So we can really serve organizations of any size. And then have a platform where customers and our MSPs can maximize their end customers' investments with our open ecosystem. And I could keep talking on this topic for 15, 20 minutes. I won't put you through that. But at the end of the day, really the uniqueness is bringing all of those that we know based on being in this industry for over 30 years matter to customers. And then our partners have confidence in us because we've been evolving with the market over decades.
Now you mentioned this is at 7,000 partners. You already have several hundred enrolled in Elevate. Do you see this creating an attractor for new partners to come into the Sophos network? Is this something that you think because and I ask it because like I'm a firm believer of having skin in the game.
Mhm.
That if you make a if a partner makes a commitment, they're more likely to actually produce rather than those that are more passive because there's no commitment. But do you see that as being an attractor?
Absolutely. Obviously, if we were only doing this for partners that were already hitting the commitment and that spend level, it would be dilutive because we're adding so many features and we reduced our price point. It would just be dilutive to our company goals. So by the nature of that, I absolutely see the net new opportunity, and we've had net new partners join Elevate, right? And what they see is one, they see that we're going to be able to lean in on new technologies, new offers, new product sets in MSP Elevate first. And those are going to be new products that our competition may not because they don't have programs like Elevate, right? So I think that's one area. Two, I think they just like the vision of Elevate, right? They like that we're always going to be sort of core and center to make sure that our MSPs are, they have architect level training, they have sales training. We're not trying to add additional costs there, right? So I think they like the vision of that. And then the third piece, which I haven't touched on yet, is really centered around rebates. There's oftentimes, companies the size of Sophos. I'll be the first to say this. Billion-dollar companies, they think about rebates really from a reseller community standpoint. And we did some of that in our past as well, right? So I'll be the first to say that as well. This is the first time that we have offered a rebate that was purpose built for MSPs, right? So we're accelerating our rebates if your MSP is part of Elevate. So it goes right back to those metrics that matter for our partner community and specifically MSPs is really EBITDA, efficiency. And we have a structure now that they know if they sign, build a practice around, they get rebates, they get training, they're going to have the newest offers, dot, dot, dot.
So let me ask you. I want to diverge on this just for a moment because you are asking the partners to make commitments, but at the same time you're also providing them with resources and, as you just described, a back end incentive for performance. Nothing
Mhm.
wrong with that. Actually, it works. Tried and true. It works rather well, whether it's product sales or in services. Um, but how much did the risk that partners are incurring on this play into it? You talked about making sure that there's an opportunity for profitability, but did you give consideration to the risk exposure or the risk tolerances of the partners when crafting this program?
Yeah, I mean, absolutely. So the first piece, we had to land on a number, right? Like, is it a 1K commitment or is it 10K commitment or is it $100,000 commitment? So one is we looked at the market and we thought $2,000 where it is a meaningful commitment to a business. So that's not lost on me by any means. But it's, 2,000 times 12 is 24,000. So that's the first lever, right? We said, let's make it conservative, right? But also meaningful to our business and to our partner's business. It's the only way to make a meaningful partnership work. All right. So that's one area of risk tolerance. The second really goes back to one of your earlier points is we had to make it so enticing. And whenever you launch a new program, I think you have to do that. It has to be almost a no-brainer. So we made it a no-brainer for a large set of our partner community to really gain the traction. And then you get a pull once you start getting to meaningful size, right? So when we take the hundreds to thousands of partners as part of Elevate, I think it's going to create a draft and pool that will, as Elevate gets bigger, it will allow us to do even more interesting things, maybe with larger commitments, or maybe with smaller commitments, and we can bring more partners into Elevate. So yes, we looked at the risk tolerance, one from the size of commitment, the length of the commitment, in that arena. And then we looked at the population on who are we trying to attract. And those partners that one will commit to us, two, all partners are quality, but some, are just of more meaningful size. And I think that's also important of sort of understanding your partner persona and who are you trying to attract, and then building your offers around those and building your programs around those. That was just the next area of risk tolerance that we had to look at.
All right. So a lot of vendors out there in security and otherwise, they're looking at managed services as a part of their future. Many of them are trying to incorporate managed services models. What lessons did you glean from the development and the launch of Elevate that others can learn from? What were your surprises and takeaways from, at this early stage?
Yeah, I'd say one is really the ponderance, and we've been hearing about it for years. So, like what I'm about to say is not a new statement, but we are starting to see more and more. You know, they may have historically been resellers wanting to move into the MSP space, but just services led, right? So when we started pulling the audience of both our partner community, but more importantly, the partner communities that we don't have as part of our 25,000 channel partners, is they see that their customers are forcing them to add more value, right? Or they're going to look in a different direction. So services led, right? Like it is real, it is here. Those aren't just words that everyone aspires to be. It's happening, right? So I'd say that is one. Two is the desire and I'm one, and everyone has different buying behaviors, but prescriptive versus a la carte, right? So I'm one that I am completely comfortable. If you give me 50 options, I'll do research for hours on end. I'll leverage AI to figure out this is the one or two. But what we heard from our partner community is actually the opposite. Like, just tell me the answer that's going to get to the best security outcome for our customers. All right. So that really sort of drove us to index to, our partners don't want thousands of SKUs, right? They want one or two that they know will work for their customer base, and they want to bundle into their core offering. So I think that was I don't want to say lessons learned, because there's always two options, but really the ponderance of how many partners said this to us, I think was key. And then the third was sort of revenue growth versus margin. We know, partners care a lot about margin, so that's, that, and that will never change.
Mhm.
And of course, they care about growth, but in order for them to get to revenue growth, they need dollars, you know, from a profitability standpoint, to invest back in the business. So we wanted to make sure that there was an incentive, both at the prescriptive offering level, right? Let's make that at a price point that's compelling, but also, to your earlier point, the back end rebate, to make sure that they have dollars to really reinvest back into, marketing, to grow the engine, to gain new customers.
All right. So, Chris, I've saved the hardest question for last. So let's say you and I are having this conversation again 12, 18 months from now.
Mhm.
What are you going to tell me? How did it work, or what are your expectations about how this is going to look in the not too distant future?
Yeah, I'd say 12 to 18 months, you're going to see one, new offers being offered in Elevate first, right? So that, I think, will create really just attraction to wanting to be part of Elevate. Where once again, that commit and spend will become a no brainer based on the attractiveness of Elevate, right? So I think that's one. Naturally, we're going to take the hundred to thousands. Um, I think one of the questions that you ask is sort of the mix of existing partners versus new. Um, Once the market pull, you're going to see really this to be one of our attractors that we lean into, and we'll still continue to talk about Flex, but we're going to really talk about Elevate, right? So, two different messages there. Um, and then it will allow us to do interesting things just around practice building, right? Because these are, there's one thing just to buy a point product, or even buy a platform, and how you really cater your portfolio when you know your partners are buying a point product or a platform. There's another thing around catering your offerings, your program, when you know that they're building an entire practice around your technology. You can do things around simplification around offers. You can do things around training enablement around personas. You can do fast track things. You can do partner advisory councils for those partners that are just part of Elevate. So it's going to allow us to really open up all the things and feedback that we've heard from our partner community. That was just difficult to do when you'd have some partners coming in, some partners coming out. You weren't sure if they were trying to build a practice or buy a point product. Now we're going to have a pool of community that we know are building a practice, and we can execute on all the feedback that we've been hearing from our 7,000 partners. And that's
Fantastic.
yeah.
Fantastic. Chris, it's been a pleasure having you on Changing Channels. And for everyone listening in, is that Channelnomics does have an analysis of the Sophos MSP Elevate program on our site. The link to it is in our show notes, and also some great insights on MSP best practices and trends. So again, Chris Bell, thanks for joining us on Changing Channels.
Thank you so much for your time. I always enjoy catching up with you.
Well, that's about all the time we have for this edition of Changing Channels. Again, I want to thank our guest, Chris Bell, the Senior Vice President of Global Channels, Alliances, and Business Development at Sophos. And I want to thank all of you for joining us again. We do Changing Channels to help exchange knowledge and experiences for everyone in the channel. If you like what we're doing here, please hit like, hit subscribe, tell your friends, check out all the amazing content and best practices we have on Channelnomics, including, as I mentioned, an analysis of the Sophos MSP Elevate program. The link for it is in the notes below. Until next time, I'm Larry Walsh.